Now, let's get into it then, JD, the Sandfire Quarterly. My old employer, as I said, I've bridged a chunk of copper there in the 2200 level if anyone wants to go get it. JD, what's happening with Sandfire?
Don't worry, we'll touch on DeGrussa as well, but let's just break down the quarterly and have a sort of overview of the company. So they produced 18,500 tonnes of copper, slightly down from 20,000. This was in line with expectations, as you sort of said. DeGrussa, where you used to work, is now coming offline. So that was just stockpiles that they've been treating there. So if you look at the group's copper equivalent production, that was 30,000 tonnes for the quarter. C1 costs were up from $1.77 per pound in US dollar terms to a touch over $2. So for those unaware out there, the C1 costs represent the direct costs for mining. So that's your mining, your processing, your site G&A type of things. So it doesn't include things like CapEx, exploration, financing things. So I had my eyes on lower costs across the board at this company. So specifically at Matsa, I wanted to see the costs come down. There's a lot of talk of cheaper energy, and that was in fact the case. So the component that energy made up of C1 costs was previously roughly 20%, and that came down to less than 10%. But overall, the costs were still higher. So the company flagged that treatment charges had sort of re-rated up, and that treatment charge is what's the cost for turning the concentrate into a pure copper product.
So that drop in energy, was that via the use of renewables or cheaper baseload power, or what was it?
Just looking at the macro over the past sort of year, you've seen that there's lots of news coming out in the energy side of things in Europe with the crunch on the back of the Ukraine invasion and so on. So energy prices have been cooling off, and that's why we wanted to see that sort of flow on at Matsa. So we'll chuck a chart up for people watching on YouTube, but those cash costs for Matsa put them in the highest quartile of cash cost operators. So not something you want to see, but hopefully
on the ASX?
No, of all copper assets globally.
Oh, right.
So it's a chart we've sourced from S&P Capital IQ. And just on the terms of all-in sustaining costs, so you can do some pretty rough math to get an all-in sustaining cost. It's not something that the company's reported for Matsa. But if you just pull their year-to-date OPEX minus the byproduct credits that they get for the various other commodities that they produce, such as zinc, and then you add the capital expenditure year-to-date, you get a figure of roughly $2.90 in US dollars per pound. So with the copper price sitting at roughly $4, you can sort of work out what a kind of margin is. So I just scribbled down before, say the company produces 123 million pounds per annum in copper, which is what they've guided to at Matsa, and you use a copper price of $3.75, which is roughly what the copper price has averaged this financial year, you get a bit over $90 million a year in cash flow. Now, that's a mine that cost them $1.9 billion US dollars, but that's just a bit of back of the envelope maths. So on the back of that year-to-date performance, the cost guidance has increased and production guidance has decreased, both quite slightly, but both going in a sort of unfavourable direction. And interestingly, we've seen Glencore, Freeport, Rio, and a number of other major mining houses across the world cut copper guidance. So we'll touch on to that macro a bit more later.
Now, what about, so you've got Matsa, we've got DeGrussa coming off, you've got, is it Mateo?
Let's go Mateo.
Happy to get clarified from anyone. So there, what's happening with them? That's in the ramping up to production stage.
Absolutely. So the Botswana operations, Mateo, first concentrate expected this quarter. So they've already started a bit of mining there, processing ramping up now.
Oh, yeah, I saw a big picture of a massive stockpile. I think they've got half a million tonne of stockpile.
Yeah, and they've stockpiled some lower grade stuff as well. Yeah. So they're also in the approvals process for scaling up that operation from 3.2 million tonnes per annum up to 5.2 million tonnes per annum. So I'd expect a bit of capital to go toward that over the coming few periods. And then moving on to DeGrussa, your old
stomping ground.
Yeah, that's right. They've transitioned from mining to treating stockpiles there. So they've also initiated a sale process. The company mentioned this in the quarterly that came out yesterday. So a bit of an end of an era there. We'll see if they end up selling it or how that all plays out there. But
Well, they have peppered the living shit out of that joint with drill holes, and like they found the Monty deposit, which was only 1 million tonne of very high grade. But other than that, just could not find a repeat.
yeah, you can't blame them for not looking.
They hundreds of millions went into exploration there.
Yeah.
Word on the decline, I heard that there was a big zinc deposit right under the airport there. That was from the geos at the pub at some stage, but where the airport was, apparently there was a bit of zinc under the airport.
I can't imagine they wouldn't rip that up if it was there.
It mustn't have been enough. But yeah, as I said, like that, because that was I think it was a 10 million tonne resource there, 10 million tonne at look close to bloody 5% copper, but have not. It just closed off everywhere. They've sterilised everything. So, disappointing.
We'll jump into the sort of bright spots for the company. So Sandfire is hugely leveraged. You could also say highly sensitive to the copper price. Obviously, this goes both ways, but if the copper price were to move favourably, that would really get a lot of benefit, and that would really have a sort of magnified impact on their earnings, and also to a lesser extent zinc as well. They're mining a lot of zinc at the Matsa operation. So if copper prices do sort of remain steady, then I'd expect the like we sort of touched on the ramping up at Mateo and the additional capital they'll need to build the bigger mill and so on to sort of constrain free cash flow over the next few periods. But then after that, they'll have a lot of free cash flow that can be used to pay down the debt. And yeah, in quite a few years' time, I'd expect dividends to come back again.
Because they're increasing from about 3 and a bit to 5 and a bit million tonne at Mateo, aren't they?
That's right. Yeah.
Yeah. Now, you mentioned the copper macro landscape. And look, even Bill mentioned yesterday, like the pending metal shortage, especially with copper. It's been it's nearly 2 years people have been talking about it, but we just haven't seen that real appreciation in the copper price.
Yeah, you'd be pretty hard pressed to speak with anyone in the mining community and not hear about how copper and these battery metals are going to do so well over the next decade. So the majority of base metal stocks were down over the first quarter of this year, but Sandfire actually, they held up quite well. So I think that was probably on the back of Oz getting taken out, Sandfire now being the largest sort of pure play copper producer on the ASX. And as well, if you compare it with the other base metals, the copper price held up much better in comparison to zinc, nickel, and so on. So what we'd previously touched on was a lot of the other majors paring down their guidance for the current financial year. And if you sort of pair that with the sort of thematic, like you just touched on, the electrification of everything, the outcomes are kind of bullish environment for copper. So a lot of sort of analysts, I think, had seen S&P Global come out with thoughts on a copper deficit sort of from 2025 and onward. But, perhaps that could happen a bit sooner rather than later. And just to tie that back to Sandfire again, that sensitivity that they have to the copper price, there is a chance that their cash flows could be really boosted by this high copper price, and that would really help them pay down that huge amount of debt that they took on, as well as pay that capex that we mentioned for Mateo.
Because they're, in terms of, like, if you just look at direct market caps, like I think they're scheduled to produce about 120,000 tonne of copper per year, which is what once everything's ramped up. And Oz Minerals that was their FY 22 23 guidance was 120 to 140,000 tonne. Sandfire's sitting at $3 billion. I think what did Oz get bought for? 7.5 or 8?
In Aussie, just under 10.
Under 10. So,
and Sandfire capped at 3 now.
Yeah, so definitely in terms of their future production, it's like, yeah, it's interesting seeing how they're valued at the moment. That was one comment on hot copper I noticed.
So I just wanted to make one more comment on the leadership at Sandfire. So the company's in a period of transition. Like you said, DeGrussa coming offline, Mateo coming online, huge acquisition with Matsa. They raised $1.25 billion in equity in late 21, as well as another $850 million in debt. About a year later, they had an entitlements offer and raised another $200 million in equity. And in this period, you've had Carl Simic, who had done a really transformational job at the company, a great job for a long period of time. Stepped down. You had an interim CEO, and now Brendan Harris, who by all accounts is a great operator. He's come from South 32, experience at Macquarie, so slightly different type operations. South 32 obviously being spun out of BHP, coming from a very different end of town. But something like a comment I'd like to make is, as an investor, you'd really want to see sort of continuity in that leadership. You'd want to see the people, the team that sort of bring about the change, sort of see it through. So it's just a thought I had on where the leadership's at that company, but we'll sort of see how they go about bedding down all these changes.
Well, I suppose Carl had his time in a way, because he took them from, he was a managing director for an exploration company until they hit this, and then took it through this whole process. And I guess I suppose you give credit to him seeing DeGrussa through to the end in a way, and it did go through the
absolutely,
I guess
more than 10
the
years.
acquisitions of Matteo and Matza. And unfortunately for him, there wasn't much or hardly any organic growth at DeGrussa.
And perhaps that's the view that the company's taken. They want people from that operational background, now that they have the sort of multi-asset producing copper business with assets across the world, getting someone from a South 32 type of business who have assets all around the world, have experience in that regard to sort of steer the ship for the next period.
Well, he's probably just cashing in, I'd say. Like, you look at they're sitting at $6. They did have released some dividends over the years, but God, when I worked there, they were up to $8, and that was, what's that, 9 years ago?
Yeah.
Because there was that. I think there was that. That was when they were making 400 mil a year or something. But that was where there was still that hope of finding another DeGrussa.
Yeah,
but it just never happened.
Yeah, and like all commodity businesses, sort of fluctuate in line with the copper price over a long-term period.
Right, good. I know you've been in the books with them for good 24 hours, JD. What's your take on Samphire, where they're at the moment? Putting all that together into a bit of this is not investment advice, but you can give a bit of a take.
Yeah, it's sort of a lot to wrap your head around, a lot going on at the company, sort of coming from a low base. But I mean, I think the key takeaway is that sensitivity that they have to the copper price. So there seems to be quite a few copper bulls out there, and it seems like a relatively good way to play that. If you're quite bullish on the copper price, then that would flow on quite well to Sandfire being able to pay down that debt, being able to pay that CapEx quickly, and sort of down the track return capital to shareholders.
So if you look at BHP have taken over Oz Minerals to essentially secure some copper supply for the future. That's the way I read it. Sandfire are looking to produce similar amounts of contained copper, as we said before. Once Matza and Matteo get to full capacity, they're going to be anticipating 110 to 120,000 tonne of contained copper production, not including all the other byproducts. Do you think Sandfire would be on the radar for any companies looking to secure future copper supply, or the Matza operation performance bit of a risk?
It's a tough call, Matty. Like I sort of said, they've got that great sensitivity to the copper price. The share price has appreciated quite a bit over the past half year or so on the back of sort of anticipated potential takeover activity. We've seen quite a lot of M&A in the metals and minings, in particular in the base metals space, over the past 6 months. And that Matza operation, just to touch on again, they really want to be driving those costs down and ramping up that production a little bit more, and just fine-tuning that operation to produce a bit more.
Considering they paid what'd you say, 1.8, 1.9 billion?
Yeah,
for
1.9 billion US. So that was quite an expensive acquisition. So yeah, everything sort of has a price, obviously, and we'll see what the share price does over the coming period. A lot of these acquisitions we've seen lately have been somewhat opportunistic on the back of poor share price performance, and you can't say the same for Sandfire at the moment, but we'll see how that looks over the near term.
Very